So here we are. We've got Bob Kirkwood with me, Karl, HK Laundry Equipment, and Bob has been in the insurance industry, and we wanted to interview you to just talk about laundromat insurance.
Yep.
Give me a little bit about your background.
Well, I joined my dad's firm. This is now a third generation firm. My dad started in 1957. I joined in 1976. Yes, it was such a year for those who are younger. And so I've been doing this over 35 years. And also a lawyer, admitted to the bar in New York State in 1981. So I've been practicing ever since, really in conjunction with the business. And it helps us a lot because it gives me an edge and a heads up in terms of some of the liability issues that we confront all the time in working with laundromats as well as other customers.
Good. Laundromats are really kind of unique. You know, we have attended laundromats, we have unattended laundromats. How does the insurance company or the whole insurance industry view laundromats?
Well, it's to a certain extent, it's cyclical. When the insurance companies are in a better cyclical frame of mind, they probably view laundromats better overall. But at the same time, usually there is a big difference in the way the industry views attended versus unattended laundromats. Unattended 24-hour laundromats are deemed to be very difficult to insure. It's not so much from the liability perspective as the property perspective. And I think the lessons of property losses teach the insurance companies that unattended 24-hour operations have substantially worse claim experience from the standpoint of property, vandalism, stuff happening to the place after, during the wee hours, and of course liability.
So Bob, when I get my insurance policy, it's usually in the inches. You know, it's like an inch thick or so. Be honest with me here. Do you read the whole policy?
No, of course not. I
Okay.
mean, but those are forms that are attached, so they're all the same. I mean, once you've read them, you read them. But
what are the important aspects? What should we be looking at?
Well, most of those are statutory forms. Most of those are CYAs for regulators, CYAs for insurance companies. There's a lot of junk in there. It's actually, if you do read it, read the main part, which is the coverage part. That's the most important, I'd say.
So we should look at coverages. We should look at exclusions.
Yes.
What are some of the key things? We kind of touched on this before, but replacement insurance? Absolutely.
Number one, make sure that the amount of coverage that's on your policy is sufficient to replace what you have in your store. Machinery, equipment, build out, tiling, floors, walls, whatever you put into it at today's prices. That is critical.
Okay.
Make sure the deductible is something that you can afford. Or if it's not what you can afford more, get a price for an increase to higher deductible. Make sure you have at least $1 million in liability. Ask about what a price for an umbrella might be. You may not want to get it, but you can at least get a price on it. Those are the really important things to look at. Once you have the other features of the policy, the liability, usually they're in there. But don't be afraid to say, are there exclusions here that are out of the ordinary?